Screen video. Screen video. Okay. Welcome, guys. Welcome. Just going to give those who are joining about 5 minutes to join us. Going to give them 5 minutes. In the meantime, I hope you're seeing my screen. I hope you're seeing my screen. We're about to start. Are you hearing me? Are you all hearing me? Could you please text me in the chat box if you're hearing me? Could you please give me feedback? Is my sound clear? Okay. Oh, a little soft. So I think I have to shout a bit. Let me record this section. It's recording already. Let me just put it on. Okay. So we're about to start in the next 3 minutes. We're about to start in the next 3 minutes, guys. We're about to start in the next 3 minutes. Okay, we're about 45 now. 45 now. Okay, so welcome, guys. Welcome. Thank you for joining this live right here we're having now. So everything will be recorded for the after session and for those who missed this meeting. Okay, so I'm just going to through this. So I hope you're all seeing my screen right here. This is the disclaimer on this meeting that we're having, and forex trading in particular, and myself too, that I'm not a licensed investment advisor. Please note that trading involves a high degree of risk, and there's no guarantee of certainty or of profit. Similar to what is shown here, past performance is not indicative of future results. I hope you're all seeing this before we go forward. Moving on. So welcome to the used to be so-called BTMM strategy, beat the market maker strategy, but according to me, I've decided to change the name and call it defeat the market maker strategy, because I'll be adding on to the beat the market maker strategy with what I also found out to be helpful and working for me from other courses beside the beat the market maker strategy that I also went through. So because of the combination and the add-ons I have done to the BTMM strategy, I've decided to call it the defeat the market maker strategy. Let me I'll share the link to the Telegram channel and to the YouTube channel where all these recorded sessions will be posted. Exactly. This is the little logo that I have now. Okay, moving on. Moving on. Introduction to the market maker cycle. Sorry. What happened? Okay. Introduction to the market maker cycle. What is the market maker cycle? Well, we all know that the market makers are not our friends and they are not our relatives. Their goal is not to give us money, but to take money from us. So we, as the few individuals who have managed to learn the BTMM strategy, and us who are going further on to do the DTMM strategy, we are fortunate enough that we are going to learn ways in which will help us not in which to help us to save our money from being taken by the market makers, and which will actually profit us in return. So meaning that instead of having the market makers taking money from us, we are going to be taking money alongside the market makers, which is the core purpose of this strategy. So we are not just retail traders, we are defeat the market maker strategy traders. We are different. We are different. For we trade along the market maker. We trade along with the market maker strategy. Market makers. The forex market is rigged, and it is always a fight between the retail traders and the market makers. And I hope you all know the theory. Let's get on to the juicy stuff. So I'll be using this PDFF, not because this strategy is all about this PDFF, but this PDF is just a guide on where we should start and how we should end, but I'll be adding on with my strategy. Let's hurry on to the juicy stuff. The market makers do have objectives. Their main objective is to take money from us. So how do they take money from us? Not from us. How do they take money from other retail traders besides us? They induce the traders to take positions in which is also called trapping. They trap the traders. They trap the traders using the so-called popular patterns that are taught all over the internet, the Google, YouTube, the free patterns that are taught everywhere. They're the ones that are used by the market makers to induce traders to take positions, thereby trapping them, creating panic and fear to get traders to think irrational. Yeah, getting to mess up with your emotions. They mess up with retail traders' emotions by creating these traps where they trap the retail traders, and they stop you out, and they get you to remove your stop losses, and over leveraging, oversizing your accounts, all those. So how do they take the money? They mainly take the money. It's either by margin calling. I hope you all know what margin calling is, where you remove your stop loss and just they get to just go against your position and thereby knocking you out. Or where you have put your stop losses, they go and hit your stop losses and then continue in the initial direction. Force traders into margin trouble and pocket the money. Yes, that's what they do. So what do we have on a typical day of a market of a defeat the market makers strategy? A typical day for us, we have three important sessions that we focus on mainly the Asian, London, and the New York. So these three sessions are made up by the major pairs in which the when in are made up by the major pairs using their time from their origin places. For example, the Asian session is just because of the Japanese yen and the other Asian currencies, but the Japanese yen being the major pair from the Asian. And for the London, there is the GBP uh, being the major from that session, and other else. Then for the New York, we have the USD, of course, and the Canadian dollar, the CAD too. So moving on. So these three sessions don't just happen, they all happen for a reason. And us as the defeat the market makers, we know their core purpose of the sessions, and we use them, and we have times that we trade. We don't just trade anytime. Everything that we do is calculated, and there is time for certain moves and for certain pairs depending on the pairs and the time at which you're trading. So firstly, let's talk about the Asian session. The Asian session is mainly for the accumulation. The accumulation being the initial high and the low of the day. That's the accumulation, also known as consolidation. I show you right here. Right here. As you can see right here. This blue coded area right here. It's the so-called Asian session where the accumulation happens. So meaning the height here, this area here, this area here is this area right here. This area right here, indicated here, is the initial high of the day. Is the initial high of the day. And this area right here is the initial low of the day. So I'm getting that the code breaker is saying that he can't hear. He or she cannot hear. Is everyone else hearing me? What I'm saying? Could you please tell me? Can you hear me? before I continue. Okay, well, okay, time is not on our side. Let me continue. They say, some say they're hearing me. So these are the initial high and low of the day. So this is the accumulation that happens in the aging session. So this is happening for the GBP USD. It varies with pairs, mind you. It varies with pairs. It varies with pairs. So for the GBP USD, we have this happening, not GBP USD only, but for other pairs. You see, another consolidation, initial high, initial low. That's initial high, initial low. So moving on. So that's the purpose of the aging session. It's just for the accumulation where the initial when the initial high and the initial low of the day are set, as it is written here. So for the London session now, so we say, so it is for this strategy, we say that the agent session's reason is for the initial high and low of the day to be set. Then for the London session is for the stop hunt. Stop hunt. I hope you know, you get what I mean by the stop hunt. The stop hunt is where the market makers hunt for our stop losses, hunt for retail traders stop losses, for all retail traders stop losses. So for us, we are fortunate enough that we know that uh, we know when a stop hunt will happen, and we know how a stop hunt looks, and we know how to manipulate it and move and make it an advantageous move for us. So that's the main purpose of a stop hunt. So it is written here, this is the false move out of the agent session and against the rule intended move. Yes, so which means there is actually a rule intended move out where just after the initial high and low of the day are set in the agent session, and the stop hunt occurs in the London session. So in the same London session that the stop hunt occurs, that's the same session where the actual intended move occurs. So that means that's when we are likely to make our money as the defeat the market makers traders. So what are they saying? Okay, so that's the stop hunt. I need to show you the stop hunt now. As you can see right here, we say this is the initial high and low of the day. This is the initial high and low of the day. This is the Asian session in the code here. So price went out of this Asian session, and the stop, and it went up, like as you can see with these two green candles. It pushed up this to the blue tracer. This is called the blue tracer, guys. Blue tracer meaning the yesterday's previous high, yesterday's high, where the way price went the most high yesterday, the last high of yesterday. That's what this blue tracer means. So as you can see, price pushed up to hit the stop losses, stop, thereby this being the code, the so-called stop band. Yeah, so whilst it's hitting the stop loss, it is also inducing retail traders to buy here. Retail traders are induced to buy here because they are made to think the price is going to go up, using these two bullish candles right here, being the push out of the agent session and being the stop hunt, as you can see it. So it also means taking out the initial high right here. The initial high which was here, as you can see, hitting the stop losses and inducing traders to take false direction. So as for us DTMM traders who will be watching this happen, and we will not be entering trades, we will not have been entering trades yet. We'll be waiting for the time for trades. We have time for trading. We don't just trade, we don't just randomly trade. There's time for trading. We'll be waiting and watching these patterns form and waiting patiently. This trading game is about patience. If you want to make money, you have to be patient. So we'll be waiting patiently whilst these moves form. whilst the stop band will be formed in the London session. Now this is the London session. Now as you can see, the London open session is indicated by this light gray shadow box, and the actual London session in the darker gray box right here. So after the stop band had been hit, thereby inducing traders hitting the stop losses, and yeah, Mario is right. Yeah, you took this out. Wow, wonderful, wonderful. That's beautiful. That's beautiful. Yeah, it was a beautiful one. Okay, so the stop band, let me continue. So you get what I mean. It's the forced move out of the agent session against the real intended move. So the sell was the intended move there, as you can see. The forced move up, then the sell was the intended move, which was the right direction. Just as Mario said, he took the sell right here. This was the actual move right here, and it happened in the London session. So moving on now to the New York session. Trend move. The New York session is the time for the real move. There is an intended move and there's a real move. The real move that usually goes 6 to 8 hours, slow and steady. It will be now slow. Sorry, it will be now slow in the New York session. Sorry, as you can see right here. So price, as you can see with the size of the candles, it really shows volatility right here, and it really shows when there's more volatility, candles close fast. Price usually moves fast. As you can see with the size of the wicks, price was moving fast, like really fast, and the size of the candles right here, it was moving fast. That's what it means. The intended move is usually fast. It's usually fast, so that it just take money from other retail traders besides us. So after the intended move happens, and people would have, and us being the DTMM traders, we would have pocketed our profit and would have went out. I'll show you the entries and the exits points in the later sections. So going on to the New York session indicated by this box right here, let me highlight it. Let me make it a bit highlighted, just like that, yeah, right here. It's now indicated by this. The New York Open is in this blue box, small box right here, and then the actual move is in this box. As you can see, it moved 63 pips for the New York session. So as it is written right here, the real move is usually goes 6 to 8 hours, and it is slow and steady. It is usually slow and steady because the price would have been very volatile in the London session. So in the New York, it would be now steady and taking the real direction of movement. As you can see from here, let's start indicating from the New York Open. As you can see, there's a lots of hours. As you can see, it goes on into the following day. As you can see, these are lots of hours right here. These are lots of hours. These are lots of hours, and these are lots of hours. This is the strategy, guys. This is the strategy. Lots of hours going here up to this point right here. As you can see, I'm not going to calculate or count how many hours it moved, but you clearly can see these are a lot. In 6 to 7 hours, it even exceeds 6 to 7 hours because it's a lot. So as it is written, so moving on, Okay, the box. Might want to check your box timings. They are off by a few candles. Yeah, it depends with the country that you are from. Well, I think comparing it with how it will be looking from your angle of view will be different just because of our time zones. But according to my time zones, they are all okay, but maybe different because we are. I think we might be in the different countries. Can someone explain to me what the box means? The box are just color coded sessions. They're just there to indicate the sessions. They have no particular special meaning. They're just for indication purpose, but you can even work without them with just your watch clock or anything. That's the purpose of the boxes, but they have no particular special meaning. It's just an indication of the sessions, of the different sessions, just to make it more easy and more easy to grasp. Then the end of the day happens right after the New York session. That's where the day ends and we get into the Asian session for the following day. And reversal is likely to happen. As for this one, there was no reversal, there was actually continuation, but it was okay. But as you can see from this New York session right here, there was reversal. Price changed and price went a bit up in price didn't just continue right here after as the day ended, but then it sort of like reversed and went on the following days. So that's the whole idea on the sessions. I hope you all got this on the sessions. I hope this is a very important subject. As we begin on this strategy, you need to understand this and you need to get it, because we'll be using it like it will be like it's the backbone of this DTMM strategy. So there are times, so it all depends on the times that you of on the time of the country that you are in with the particular sessions. The Asian session, if you're not in Asia or if you're in some other continent, it all depends with your time comparisons. So my advice is to look at these times. This is Eastern time zone. Look at the Eastern time zone along with this time and look at your time sessions and compare it, just so you don't get mixed up. You don't mix up the times. So to make it easy, there's now a BTMM installer. I put it in the channel. It is there in the channel. I'll highlight it afterwards. If there's anyone who need help in finding it, you just DM me on my Telegram and I'll help you set it up and I'll give it to you. You just set it up. It just goes along with your brokerage time, because your brokerage will detect which country you are in and the times in your country, and it will just convert it so that so then okay so that it will just convert it so that it's just automatically inserted. The Asian session, everything will just be automatic. You just need to look at the time zones, look at the boxes, the Asian sessions, that which box is forming, what color of box is forming. So it's easy. You don't need to really pay particular attention, but though you need to know these things, you need to know the times. So I've mastered my times, and depending with according to my country. So you need to do the same. It varies with countries. I cannot start doing it for all of you until I finish, because you're from many countries. You trade the market maker method? Oh, it's yours. A variation of, yes, I do trade the market maker method, and because I trade the market maker method, and I have added a little bit of other strategies to it, I have decided to call it the DTMM strategy. But as for now, this is just the core basic BTMM market maker BTMM stuff, like the core purpose, the beat the market maker strategy stuff. This is like the basic stuff. So I hope you got that on the times. So remind me if you didn't have this set up already. Moving on, as I have indicated, the agent session. I hope you're seeing this. The agent session is the accumulation phase or the consolidation phase. The same thing. The stop band, which is the false move out of the agent session, and the intended move, which usually is very volatile and very fast, and it goes into the New York reversal, back into consolidation, then, and this is where the price is usually slow and steady and goes on for 6 to 8 hours, meaning from the New York time to the following day or whatever, but it's usually slow and steady. This is the GBP JPY pair 15-minute time frame. By the way, these sessions are perfect. Our strategy. These sessions mainly work clearly on the 15-minute time frame. Please note that. Please take note of that. 15-minute time frame is the most basic and most functional time frame for for our strategy right here. Phases of the market maker, as you saw right here. This blue arrow is indicating inducing of the retail traders to take sales right here. Then there is a railroad candle right here, as you can see with my cursor being moved here. Then there is reverse of price right here. So there is inducing, then there is trapping, then there is shift in direction, which is the move right here, which is the very big move right here with big candles right here. This is the big shift. Yes, the Zoom is recorded. I'll post it on the Defeat the Market Maker channel. I'll post it there. Yes, it is recorded. You check it out later. How do you say it? We'll talk about it. Not now. We're not talking about entries now. As for now, we're doing the most basic stuff for those who are like learning, who are still learning into this strategy. We're doing the most basic stuff. As for you, if you are if you are at an advanced level with this strategy, you can just stick around, learn a few things, or you just hop on later when you'll be talking about the stop losses and the entries. So moving on, we say price induce, trap and shift. That's the motto. That's the main that's the foundation. That's the foundation of the market maker cycle. Induce, trap, shift. Induce, trap, shift. I hope you're writing this. Write it somewhere. Induce, trap, shift. If you just know that and make it stick in your head, even if when you get irrational whilst trading, when the market makers are messing with you, when you just know that they're inducing you, and now they are trapping, and now they must be shifting, you'll be able to survive and get out of it, and you'll be able to control your emotions. I'll tell you, you never blow an account. You will never blow an account again. Just know those three words: induce, trap, shift. Okay, so there's 3 levels of rise and 3 levels of drop whilst inducing. Let me show you what I mean. As you can see right here with the 3 bearish candles right here, these are 3 levels, the 3 drops, one level indicated by each candle, by each bearish candle. 1, 2, 3 drops right here. That's 3 drops. Then This 3 drops, 3 rises. These are meant for inducing digital traders, making them think that the market's now going down, yet they're trying to just trap you. During those three levels of rise or drop, we do not trade. We do not trade. I repeat, we do not trade. We wait for them to induce the retail traders. That's for the retail traders, not for us. Not for us. We are waiting for this beautiful move here. Now this move is made for us now, not this one. This one is small and it's not for us. This one is big and it's for us. I hope you get what I mean. The intended move, that's for us. During the inducing and the trapping, we don't trade. We take the shift. We are patient and we know what we're doing and we wait. We have no way we're rushing to, and we wait. M or W formation, or at the high or low of the day. At the high or low of the day. So are you just going to cover the backbone of the market maker method, or you discuss your method as a whole? Okay, for me to discuss my method as a whole, I need to go through this first stages first of the beat market maker strategy until I get into my strategy. So also, which also means that for you, anyone of you guys, to be able to understand my strategy, you also need to go through this with me, because the backbone of my strategy is BTMM, for which I was mentored by Steve Mauro, and I took lectures from other different BTMM teachers. So I have like a very strong background on the BTMM strategy. So I just had to mix it up and change the name and call it something else, because it's now different and it's now stirred up and mixed. So M and W formations, as you all know, guys, BTMM strategy, we have the M and W. This is the trap now. As you can see right here, there's a W right here, and this is a trap. Let me look for more traps. So the market gives us W's and M's and sometimes V's and A's. Please take note of that. V's and A's. Right here is an A right here. It's an A right here. There's an A right here. It gives us V's and A's, as you can see. This is an A. Say that gives us an A or an M, or it gives us a W or a V. Right here is a W right here. There's a W. Those are the trap moves. So for trap moves, say that they give us, as you can see right here, let me use this. Say that they give us V's, W's, or I think my 40 minutes is about to be up. As you can see right here, W, it gives us V's, W's, it varies. They do what they want. Our job is not to tell them what to form or what to present, but our job is to be patient and just see what they want to give and act accordingly and trade accordingly, using our strategy and following our instructions, which are not to tell the market makers what to do or how to do it, but we have to understand and see what they do and what they present for us, and we work accordingly to that. So that's very important too. We don't need to tell the market what to do. We don't need to want it to move in a certain direction or what. We don't need to do that. That's not our job. That's their job. Our job is to wait for them to do their moves and present their moves, because we know already we have particular actions for their particular moves and how we would respond and how we can respond for their moves. So moving on. reversal back into the consolidation. As we said, same thing. You see, prep, there's a W3 pushes to induce traders to short, which is to sell, then they trap, then they shift out of the zone, and that's the trade that we take, shifting. Then end of day reversal, it depends with how it would have how it would have presented as well, so that we see if we take it again or not for the day. But this shift just for one day, it's enough, it's fine, it's fine, it's fine. We just need to ramp up the lot size, then we just go in. As you can see, guys, as you can see, weekly market maker cycle. As you can see, I hope you're all paying attention. The weekly market maker cycle, H1. So as you know, our week as traders starts on Monday up to Friday, 5 days. So for those particular 5 days, we have particular patterns and particular moves that we'll be expecting, and particular levels that we'll be expecting as DTMM traders, that the market makers will be presenting for us if they present. But if not, they don't. If they don't present them, we do not trade. I repeat, if market makers don't present our cycles or our expected cycles or our expected patterns, we do not trade. We do not trade. Do not trade on those times. I hope you get that. We do not trade. But then if they do, we do trade. We do get in and we do make money, guys. We do get in and make money. So these are the levels. So we say at the beginning of the week, we expect the market makers to form a peak, to establish a peak, which is the starting point for that particular week. And that will be on a Monday or Tuesday. Monday or Tuesday. So after it forms a peak, we expect it to start either with on our peaks, guys. On each and every peak that the market makers make, we expect either a V for a peak high, for a peak high formation. We expect an A or a M. Then for a peak low, peak formation low, we expect a W or a V. As you can see, here we have M and here we have W. So after the market would have presented an M on the H1 time frame for the market maker cycle, we will be expecting for the whole week to sell up to Friday, where we would now expect the market makers to give us a W, confirming that the peak formation low has been formed and set, and the market is ready to reverse, and the market will then reverse going into the next week, following week, and so on and so on. We have what we call resets. We do those. That's when the market maker, after you have formed a beautiful cycle with beautiful levels for a particular week, into the following week just continues falling. That's where we have what are called resets. That's where they come in. We'll talk about them in the later chapters. So for this one, it's like two perfect weeks. We have the week where the peaks form and the levels are formed clearly. We have the first level here, and we have on the first level, at the first level, after the peak has been formed, on the first level, as you can see with the arrows right here, the upper arrow is cancelled because on the first level it's just bearish. You are expecting sales. As I said before, we do not take inducing. We are not induced. We are different. We are not induced. Retail traders are the ones who are induced. So no trading at level. No, we do not go against the peak. We do not go towards the peak. I mean, in level one, we go against the peak. Like we go along with the trend. After the peak has been locked, we don't go back. We don't trade back to the peak. We do not counter, as Steve called it. We do not go back. That's why the arrow is cancelled. The upper arrow is cancelled. and it's bearish. Then for level 2, it depends on level 2. And level 2, that's where we expect maybe the upper and lower arrow are not cancelled, because we might that's where we might experience the reset, or the market continues to level 3. So there is possibility for either buy or sell in level 2. Then in level 3, as you can see, the market, the peak, after the peak had been locked, would have been locked, there is also possibilities for either buy or continuation low, continuation to the downside, just because this all because of the because of resets. We might experience resets again. So that's the whole idea. We do not trade in level 1. We do not counter in level 1, like as in we do not go towards the peak in level 1, because it's definite that is going to the opposite side. And there is a particular name for that trade, and that's called the safety trade. We talk about those in the future events. So as you can see right here, this is the 60-minute time frame, the H1 time frame, and there are 3 levels of drop. There is peak formation, as you can see with the peak formation high, as you can see with the formation of the M right here. Then levels 1, 2, 3, then peak formation low W. Then we go on to the next week, the following week. There's levels of rise again, level 1, 2, 3, then peak formation high again, and M, and so on and so on. That's the whole idea. Let's continue. What did you traders see? We are different. I repeat, we are different from retail traders. Yes, literally we are retail traders, but then we do not trade like other. We are the few 10% of the retail traders that do make it in this market and that do come out profitable. Just because of this strategy that we use, the DTMM. Retail traders see a rising channel, and then with the break of that rising channel, as you see trend lines, and as you have had the free information on YouTube and on the Google, all over, that circulates, that the brokers give us. There's the information that the broker gives us. By the way, brokers and market makers are not our friends. We are not friends with them. We are against them. So we all know that their intended purpose is to take money. They want to take money from retail traders. The market maker strikers, we know better. With the market maker, trend starts once M on top locks and counts starts to run lower. I hope we have talked about that. The M right here being locked and then runs down. You see, as you can see, this is just the market maker strategy, as you can see, and the break, and it breaks thereby at the same time when our peak formation M is confirmed. Let's continue looking for trade setups. I hope you all can see this. Let me check if someone is saying anything. Okay. How do we tell that a peak has been logged on M15 and H1? Thanks. Okay, there is a really beautiful way that we do tell, and it's done by the use of EMAs. We'll talk about that in the EMA section. Don't worry, we are all here to stay. We'll talk about that. As for now, please do get this basic stuff. Get it, may it please stick, and may you please take note of it so that you won't forget about it when you'll be talking, and you understand the advanced sections too. Please take note, or make sure that you get this recorded version, this recorded live, and keep it so that you refer back to it. because when we'll be talking about the advanced section, we will not be talking about this basic stuff. We'll be just assuming that everyone knows about this. Okay, once you've identified where the market is, where you are in the cycle, yeah, there are levels. As I told you, there is level, we count from peak, then we're going to level 1, level 2, level 3 on every time frame, though we have recommended time frames to watch, which are H1 and M15. This is for short-term trading of the DTMM, which is the one that we do. Yes, there are ways that we do the swing trading, but then we'll talk about that. But as for now, and as for the DTMM strategy, the recommended time frames to watch are H1 and M15. Please take note of that. Please take note of that. M1 and M15. H1 is for your directional purposes, directional bias, and M15 for your entry at the second leg. As I said, M15 is the bomb of the strategy. You need to take note of this strategy. So as you can see, it is written second leg of the M or W formation. So there are ways that we can also use to identify an entry when there are no M or no W, meaning that there will be V or there will be A for A trade formation. So there are ways, and I'll show you those. And for the M and W formation, I'll also show you how to do the entries. We'll get to that. So combining the, as we said, the H1 is for directional bias, and the M15 is for entry sake. As you can see right here, this is the direction as we learned in the H1 weekly cycle. Level 1, where we say we do not trade back to the, we trade against the peak. Level 1, 2, and 3, and the peak is then formed again. The peak formation high is then formed. Then on the M15, as we talked about in the very first section, the Asian session here, with the Asian session indicated by this blue box, the induction, the inducing, the trap, then the shift. The same thing, guys. It's really the same thing, literally same thing that we're talking about. It's just the same thing. Then the shift, that's the one that we trade on the second leg right here. We enter here, then we collect our pips, then we get out here, then we call it a day. So for this London pattern, super clear London pattern, they vary. There are 3 types of London patterns. We'll talk about them soon, just about now. So this is an example. This is an example, guys. This is an example. It's the same pair. This part, this half is on H1, and this other half is on M15. So as you can see, as we were talking, there's just the same thing. Level 1 right here, 2, then 3, peak W formed, M right here, level 1, level 2, level 3 here. Just same thing, just the same thing. Then level 1 again formed right here. So it is on this level 1 right here, that this M15 is highlighting. So on this M15, as we now get back here, there's induction out of the initial low of the day, the Asian session, and then there's trapping of video traders, then there's shifting, then it's this move that we take. Is the same thing that we're talking about, guys. It's really simple. It's just simple stuff. Let's move on. Learn to recognize the variations. That's true. You need to learn to recognize the variations. They do vary. The London sessions do vary. They're not always as perfect as this or as the drawing right here on top here. They vary, but then they're just the same variation of the pattern. The London session patterns, There are three types of random pattern sessions. There's this one, the perfect pattern session, where the induction is clear and it's right out of the agent session. The induction is clear, our entry is done on this yellow box. I'll indicate it, I'll teach you how to see it on the actual price and actual time. Then just the same thing, just opposite directions. This one is for sell, this one's for buy. Then there's the type 2, where price does not really get out of the, like, don't really break out of the initial high or initial low, right, when it's the buy, and then initial high when it's the sell. Price does not really break out of the initial high or initial low, but then it sort of like retest the initial high or initial low, then moves down. The moves down. This all happens in the London sessions. As you can see right inside here, there's a little shadow box right here. It's indicating the London session. Thereby these patterns being called the different types of London sessions, different types of London session patterns. And the third one, the price does not even get a break out of the initial high or initial low. It gets onto a 50% level mark, meaning the midpoint of the initial high or low. That's where the price retests, and it's called the 50-50-50 trade, meaning that the price will retest the 50%, meaning the middle mark of the Asian session, the initial high or low, in the midpoint. It reaches this area. That's the first 50. The second 50 is for the 50 EMA. There will be a 50 EMA in confluence here. There will be a confluence of the 50 EMA right here. Then the last 50. The last 50 is for there will be a TDI bounce off the 50% level. We'll talk about that. I will remind you. I'll come back to this when we talk about when we get to talk about the TDI section. I'll get back to this. So let's move into examples. As you can see, induction high, low. This is very clear. This is the London pattern type 1. That's the type 1 right here. As you can see, it's indicated here. There's the H1, there's M15. So induction trap shift. This sort of like an M here, as you can see, and the first leg right being low, then the second leg being high, much higher. Then type 2, as you can see right here, type 2. Then the type 3, as we indicated, the type 3, 50% level bounce, then the 50 EMA, this blue line right here, 50 EMA bounce. Then there's a 50, there's the 50, it's not clear on this TDI level, but I'll show you in the next videos. It's not clear, it's not indicated right here, but there's a bounce off the 50% level mark of the TDI, meaning the midpoint also of the TDI. This is GU, and this is the H1 time frame. We'll talk about that. This is the initial support and resistance. We'll talk about that, indicated by these black lines right here. You set this up manually, you put them manually. We'll talk about them in the next videos. Talk about, there's a lot to talk about, guys. There's really a lot to talk about. So I'm going to share the link right here in the chat box, and I'm expecting you to join the group so that you get the link, you get the video, the link to the videos, and the link to more videos, and that's where I'll be posting the links to more Zoom meetings like this one. where we'll be talking about this. Let me see. Oh yes. Okay. I hope you get you join. Please join before we end this session. Join. Please join. Please join. You're welcome, guys. So stay tuned for part 2. We are getting into part 2 soon. I'll be communicating to you guys through the channel, with the link that I've just posted here. I'll be communicating with you. I'll be posting for questions. You just DM me. I'll help you. No one is being asked to pay anything. Everything is for free. Please join, and please do share. I'm going to post this video on YouTube. Likely pay a visit to the channel, and there are more videos. And please share these videos with your friends, relatives, loved ones, all those people who are into forex trading. Let's win this market makers. Let's trade with the market makers. Let's not trade against them. Let's trade along with them, and we need to learn this type of a strategy. And it's the key. This strategy is the key, the DTMM, guys. So thank you for joining. So I'm going to stop now.